Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Ajay Sharma in the studios. And for the markets, while we were doing pretty okay, we were the region of world outperformers. It was the Nifty bank that you could blame that late hour slip onto. And the fact is that we finished a good 100 points lower from the top of the day. But the momentum is intact. Yes, banks were the sour case. We will talk about that as to what the Nifty bank may have preempted. But yeah, sharp fall in financials in the last 30 minutes. So far this week, we're up over 1%, so can't really complain. And for the last two trading sessions, minuscule as it may be, guys, FII buying is back.
Yeah, FII buying is back, but the big question is, after that a decent run-up this week that we have seen, we're tracking best gains in almost 2 months. Will we sustain that today, or whether there'll be the break that comes in, because financials don't look in the best position right now. Having said that, crude is the other big talking point. Overnight, we have seen almost a 5% slip as far as crude prices are concerned from across the globe as well, and it's now sitting at the lowest level since the month of July. Remember, if you look at the last few weeks itself, crude has actually slipped almost 11-12% in the month of November so far. A couple of reasons why we have seen this sharp fall. The inventory data that we got from US was high. So on the supply side, things seems to be managed and pretty much okay. And there is trouble on the demand side as well, because it seems like there is weak energy demand in China. And that's the reason we have seen the refineries throughput in China has slowed down. And as a result, we'll see double impact. Of course, it's very good news for the economy. And, fiscal deficit, current account deficit shapes up better. And for individual companies which are big users of crude, whether it's a paint company, whether it's a tire company, whether it's the rest of the, aviation sector, etc. as well, they will react positively to that. So that's the positive news, Ajay. But then, of course, the dampener coming in on financials.
Guys, there's a very interesting similarity in which how Bank Nifty behaved yesterday and how Bajaj Finance also behaved right before that, which one gets looking at the screen, one gets a sense that probably market had a wind of it. Because if you analyze Bajaj Finance fall in the last hour day before, everything, all the other financial NBFC were fine. Bajaj Finance suddenly fell off and then ended at day's low. The next day, you saw the bad news come in and the stock bottomed in the first hour of trade. Will Bank Nifty also see the same fate is something to watch out for, because this increase of weights doesn't really come as a surprise. RBI on various platforms and their monthly bulletin was already giving a hint that they are not comfortable at the speed at which consumer loans are actually growing. And so one saw it come. And if you really take a deep look inside what exactly has come, this actually increases the capital raise requirement for the banks, not for NBFCs as such. NBFC will pass it on. They are converters. Their cost of borrowing go up, they pass it on. Yes, at the cost of a bit of growth, right? You saw Bank of Baroda last evening already put out to exchanges that they are meeting for capital raise. So Bank Nifty in isolation fell in last hour of trade today. So it will be very interesting to see whether first hour of trade today, Bank Nifty makes the intraday bottom or not. Because otherwise, if you look at the bigger picture, slightly bigger picture, do you think banks will find it difficult to raise capital in current environment? Absolutely not, right? Because the roadmap of growth and all, but near term, yes, there could be some pressure. Also, look at the way how carefully RBI excluded certain sectors from this, MFI, priority sector lending, MSME, education, housing. So if you look at the overall, construct of the NBFC loan book, 80% is actually left behind. So there's no really big worry, right? So this is interesting, and crude, of course, is a big bonanza. It has been falling off. So I think Bank Nifty will get support from the crude fall also. Whenever there's a sharp fall in crude, the yields actually soften and the blow will get cushioned to some extent. But of course, we are putting the spotlight on what's happening on this issue of higher risk weights on consumer loans and personal loans in particular. We have somebody who understands this entire space very closely. Of course, KK Mistry has been heading the biggest mortgage company in India for a very long time, and he's now joining us to help us understand this initial news which has actually come in. It has made large parts of the market slightly nervous. KK, thank you very much for your time, and appreciate you joining us right early in the day. What are your initial thoughts on this latest circular from the RBI? And also, if you can help us understand in layman terms the impact it would have on the financial sector, banks, NBFCs, all of them.
See, my view is that RBI for the last nearly 2 months has been continuously making some remark or the other or some comment on the other about the fact that the quantum of unsecured lending in the system has increased a lot, and RBI is a little concerned about it. So one was expecting some kind of regulatory action around that. Uh, what exactly that action would be, obviously one did not know. And now we know that what they've done is that the risk weight on these loans has been increased by 25 percentage points. So where it was 100%, it's become 125%. Where it was 125%, it has become 150%. Now, fortunately, to the best of my knowledge, whatever little I've known and spoken to people in the system, people are still not seeing any concern or any deterioration in terms of asset quality as far as the unsecured loans are concerned. So to my mind, this is a precautionary measure by RBI, a welcome precautionary measure, given the fact that the lending to this sector, to this kind of lending has increased so much in the system. So it's more precautionary. All it means is that the banks and the NBFCs will now need to provide more capital when they do loans, these loans. Providing more capital means that the return on equity on those loans comes down to some extent. That's the implication.
Right. Keki, but were you surprised by the move at all, or would you say that the RBI has been extra cautious, has been giving out hints out there? Your initial thoughts on the extent, the coverage, and the quantum of these measures?
See, the Reserve Bank has been talking not just of the higher degree of loans to a higher degree of unsecured lending in the system. They've also expressed some concern about the amount of lending that banks are doing to NBFCs. And most of these NBFCs, or some of these NBFCs, let's not say most, some of these NBFCs are using the capital, the money that they get from banks for giving these kind of unsecured loans. So that is where the link comes between the banks and the lending. Now, I don't know whether this would apply to, for example, a loan given to a LIC housing finance. When a bank lends to LIC housing finance in turn does only secured lending. It does not do unsecured lending to the best of my knowledge. And therefore, logically, if we extend the logic of the circular, it would probably not apply to lending to an NBFC which is giving secured loans. But again, I'm sure a clarity on that will emerge in a day or two.
Sure, Mr. Mystery, point taken. But the bulk of the credit growth in the last few quarters was actually coming in from consumer and retail loans. That was the area which was firing up for all of these financials, which was resulting in that 20-30% kind of growth. Do you think the circular will now impair the credit growth rate and it will come off meaningfully?
To some extent, yes, the growth rate would come down because, as I said, at the end of the day, a bank or an NBFC provides loans based on profitability of a product. When you determine the profitability of a product, you look at the risk involved, you look at the provisioning required, you look at asset quality in terms of past track record of non-performing loans, and of course, you look at the amount of capital you need to provide. Now, one of these factors has changed, which is that the capital you require for giving these loans has increased, and therefore, to that extent, the profitability is lower. So therefore, if the NBFC's profitability on a certain product is lower, their growth on that product could also possibly come down, unless you are looking at a bank or NBFC which is extremely well capitalized. These are signals from RBI, so I'm sure that the banks and the NBFCs will pay heed and will slow down to some extent some of this lending.
So, Keki, we were just discussing how the impact on banks would actually be, whether it's their capital raising requirements or not. And will PSUs in particular among the banks be hit more than private banks and NBFCs in your view?
Well, any bank where the capital ratio is lower will to that extent be more impacted than banks who have a higher capital ratio. Also, if you look at the NBFCs, barring a handful of these NBFCs, most NBFCs are today extremely well capitalized. If you look at the balance sheet and the capital ratios of many of the large NBFCs, they are very well capitalized. So to my mind, all it does is it reduces the return on equity that you generate on that loan. It may make these kind of loans a little less attractive compared to what they were in the past. and it would probably slow down lending to this sector, which is what RBI wants.
Right. Keki, so in your assessment and conversation, with your peers, you're not hearing anything about asset quality issues, are you? Because we understand that a couple of NBFCs like Chola did raise some concern within the unsecured lending to an extent.
Well, to the best of my knowledge, based on the people that I have spoken to, I have not been given to feel by anyone that they are seeing any significant deterioration in asset quality. But these things come with a lag. Our economy is growing so well and so strongly at the moment that the risk at this point of time could become lesser. That is probably RBI's point, that today the risk may be lesser. Tomorrow the risk could increase if for whatever reason there is a global issue, there is some geopolitical issue and the growth slows down a little bit, which I don't think will happen. But that could be, obviously, as a central bank, you have to look for those kind of events.
Sure. And Keki, what would be the impact for credit card players like SBI cards? Because of course, for them, there should be a bigger hit, right? And even the platforms like Paytm, in your assessment, because they were getting into unsecured lending.
Look, I don't know specifically about any particular company, and I don't want to comment on any particular company, but the risk weights on all these products has increased. So I don't think there is any specific concern with regard only to credit cards. It's a general concern with regard to unsecured lending. It could possibly just mean that some of these credit card companies could increase the interest rate that they charge. Could happen, I don't know, to compensate for the slower growth, a slightly marginal loss, or not loss, but a marginal reduction in their profitability on these products. That is again left to each company.
Thanks so much for joining us this morning and helping us understand this very important developing story today. Keki, of course, is traveling right now and he joined us from Dubai. But thanks very much, Keki, for your time. Well, let's take it forward. The story has more legs, and banks and NBFCs now have also approached the RBI for further clarity on new risk weightage norms. And we learned that from our sources that banks want clarity on fixing sectoral limits for consumer loans. Lenders may have to hike interest rates to offset the impact of this higher risk weightage news. My colleague Ankur Mishra has more details. Ankur, tell us, what do you gather the conversation between lenders and RBI now?
Yes, sources say that lenders may reach out to Reserve Bank of India on new risk weight asset norms, and these have been released by the regulator after the warning which was given in the last policy. What we have learned through sources is that banks want more clarity on the sectoral limits which has been prescribed as per new norms, and therefore the banks are mulling that they will reach out to Reserve Bank of India and get clarity on the same. Apart from that, NBFCs are worried that the lending which was happening through banks to them may get impacted. In fact, they are worried about increased cost and the source of funding which will get impacted due to these norms. So NBFCs may also reach out to regulator regarding the same issue. As far as the impact is concerned, what we learn is that there are very limited options what the lenders have. Some of the lenders may look to increase rates to offset the impact, but necessarily they have to raise capital for adhering to these norms. Because the regulator has made clear in the last monetary policy itself that lenders needs to be alert on unsecured loan portfolio, and now it has come in form of action by giving direction to increase risk weight assets to the lenders.
Right, Ankur, we'll leave it at that. Let's dissect this news even further. Somit is here in the studios to analyze that, and he's been skimming through all the brokerage notes which have come by post the RBI move. Somit, who tends to get impacted the most?
So firstly, what brokerages are saying is that there is a 3-point impact on this. The CET1 or the Tier 1 capital will come down for banks and NBFCs. Secondly, the cost of funds will increase. And third, banks and NBFCs with lower CET1 or Tier 1 capital will have to resort to a fundraise for growth going forward. Now, the consensus view from all the brokerages is the fact that Bajaj Finance and SBI Card will be impacted the most in the NBFC space. SBI in the PSU bank space, because their CET1 ratio is already below 10, and this move could further push down the CET1 ratio for SBI Bank. So they'll have to resort to fundraise going forward, and also other PSUs with lower CET1 ratios should be watched out for. When it comes to private banks, fundraise might not be necessary because they are well capitalized, but banks which would see their CET1 ratio come down the most are RBL Bank, ICICI Bank, HDFC Bank, AU Small Finance Bank, Federal Bank and Kotak Mahindra Bank. Now apart from banks and NBFCs, it is Paytm that would also get impacted, because that was the company who was most pushing towards the unsecured loans. Now their books won't be impacted, but the growth could slow down given the fact that their lending partners would now get more cautious, and there's a tactical positive view coming in here from Morgan Stanley in fact, and that's on housing finance company. Now they believe that because they are into secured lending, they won't be impacted at all from this move, and banks and NBFCs like Canfin Homes, PNB Housing Finance, Aptus Value, Home First, LIC Housing Finance could stand to benefit because of this move coming in from RBI.
Okay, yes, definitely. So, of course, you have housing finance companies which are into secured lending, and then MFIs which have been kept out of this purview. So, they have been unscathed as far as this latest circular has come. Thanks so much, Somit, for analyzing that for us. But the other one that you watch out closely for is Crude. Quite a bit of tumble is what we saw overnight. First, explain us the reasons, and secondly, the implications.
Well, crude has come down to $77 per barrel. It's trading below all its key daily moving averages. Also, the RSI of crude has now come down to 32. And one thing to point out here is that in the last 3 years, whenever crude RSI has come down to 30 levels, which is the oversold zone, we have always seen a bounce back from that level. So keep an eye out for crude. It could move up in the next few levels. Next few trading sessions. Now, why it has come down? Because US crude inventories have increased, and also China's throughput oil refinings have slowed down in the month of October, which could also indicate that there could be some slowdown in demand in China as well. So overall, higher crude supply in the market is something that has pushed crude prices lower. Now, what to watch out here is the November 26th OPEC meet, where they could push down their production for more going forward, given the fact that they have always had a consensus view of keeping crude prices anywhere between $80 to $85 per barrel, and currently it's trading at around $77 per barrel. Now, who stands to benefit the most? Now, the consensus view in the street is that the oil marketing companies like Indian Oil Corporation, BPCL and HPCL stand to benefit, because the marketing margins of these oil marketing companies would go up, and that is a fact. Now, if you see on petrol, they are earning a marketing margin of more than 5 rupees. On diesel, they are earning a marketing margin of more than 1 rupee, which was earlier negative when crude was at $97 per barrel. But one thing that the street is currently missing is the fact that from $97 per barrel at the start of the quarter, crude prices have come down to $77 per barrel. Now, this could lead to significant inventory losses for these oil marketing companies if crude prices continue to sustain at these levels. And standalone oil refiners could get impacted the most because of this, like Chennai Petro, MRPL or Reliance Industries. These are the companies which do not have much exposure towards marketing front, and they are more reliable or relied on a refining front. So they could be impacted the most because of inventory losses, because they would have bought crude at 97 and now they have to push it at around $77 per barrel. So that's something that we need to watch out for when it comes to oil marketing companies and oil refiners.
So this is actually a very big important point which you have brought it forward, the crude fall, because beyond the sectors you have spoken about and some of the stocks, the larger point is that RBI has been working with $95 average with their calculation. The price is hovering at 77.8. So even if it averages 85, it will give a lot of cushion for RBI. So this is a very important monitorable from market standpoint. But let's move on and talk about what's happening in the rest of the world. The global cues have been very supportive, and India has been partying on that tune. But Vinny is here with the latest as far as the global commentary is concerned. Vinny?
Absolutely. So in terms of commentary, we have a lot of commentary coming in from different people in the global world, and especially coming in from the Fed side as well. Federal Reserve Bank's Cleveland President, she's actually highlighting that they have not yet decided in terms of whether another interest rate hike is actually going to be still needed for the economy. And furthermore, they're saying that the economy is evolving. So first they'll see how the economy is evolving, and then they may decide on whether there is a rate hike requirement that will be there. And obviously, they are looking at more of a balanced place and a balanced approach that they will be looking at. I don't think that right now they could decide on something what is necessarily going to be the next step as of now. So they're going to be waiting and watching in how the economy is actually going to be shaping up before the next meeting, and then they may decide on whether a rate hike is required. Let's move on, talk about Bank of England. We have commentary that is coming in from Catherine Mann, who's highlighting in terms of the rate setters in Bank of England are also, they have very little room to actually take a rate cut as of now in terms of interest rate because of the flattening nature of the UK economy. So yes, they're keeping an eye out on that. They're highlighting in terms of they think that UK has, for example, one of the challenges is the supply side issue which is coming up in the UK as well of the economy that is growing very, very slowly. So that is an issue that they are highlighting in terms of that. That's the word coming in from Catherine. Now moving on, we have Bank of Japan's governor who's also talking about the positive impacts of how on the Japanese economy that is working out in terms of the rate cuts that they've taken. And what they are saying is that Bank of Japan will continue with the monetary easing patiently to support the economy in Japan. Whether US takes a rate cut or not, that's not something that they're too keenly watching out. But apart from that, they will also be continuing to support the economy if they require it. Other than that, lastly, we have a commentary coming in from Lawrence Trade Summer, and this is on agencies. When he spoke to agencies, he said that he believes that he sees a 20 to 25% chance that there is a possibility of a recession in the first half of 2024, and the recession is hard to recognize until it's already begun. So, but a possibility of 20-25% is what he's seeing for the economy in the first half of FY24.
Okay, Winnie, we'll leave it at that. Well, all things pointing towards a good start. Maybe NBFCs, of course, or for that matter, banks could be a spoiler to start off the day with. But let's ask Kunal Nooresh exactly that. Kunal, Nooresh, hi, good morning. And Kunal, I want to begin by talking about what transpired in the Nifty Bank in the last half hour. Do you think that selling could accelerate today and then rub off on the overall market too?
Yeah, good morning, Aisha. So I think the market got a whiff of what could probably have happened regarding the RBI announcement. I think that's why you saw many of the banking stocks actually leading the correction. And then once the panic started to seep into the markets, we saw the correction coming back into the other large cap names like what we discussed yesterday for names like Reliance, ITC, etc. Yes, I think there could be some bit of more follow-through downside for the banking index, but I don't expect a major turn of events on the downside for the indices. I think it's just that we were trading into a range on the higher side of 44,000, 44,400 for the bank Nifty. That range on the upside as well as on the downside could probably be tested. So we may now be looking at 43,800 as a support for the bank Nifty and 44,300 to 400, which was yesterday's high range. I think that could act as a resistance for the banking index. So not expecting a major correction, but yeah, I think maybe a mean reversion towards the key support points. That could be something which could be seen in the markets.
The take as far as Nifty Bank is concerned and what we should expect perhaps from that index today. Nooresh, your view on the markets right now? 2 days we were in the green. We were hoping we'll end the week with gains of almost 1.5–2%. Seems like there'll be a bit of a break today.
So looks like a pause in momentum for the Bank Nifty, and overall Bank Nifty as such was not able to take the leadership, and with this news it makes it difficult to carry the momentum on the upside. On the downside, maybe we may not see a large downtake as such, but on the upside it gets limited after this move. So again, we go back to the same names which are there in the broader markets to do better. So on the Bank Nifty, till the time we don't cross now 44,800 to 45,000, on the upside, it is a range-bound sector as of now. Overall, on the downside, 43,500, 44,000 should act as a support. So we could get into a tighter range for the Bank Nifty as such.
Let's talk stocks as well. Kunal, what's on your list?
I'll go with two buy calls, focusing on Titan stock, which I think is yesterday inching towards a breakout for itself. So would suggest a buy with a target of 35.50, expecting at least 200-point up move in the stock over the near term, and stop loss could be kept at 30 to 80 mark. Polycab is something which has also come back into a more of a rally phase. The stock has managed to retrace back more than 50% of the correction the stock had seen in the last 1 month. So, and it's also formed a bullish pennant formation on the RD chart. So would suggest a buy with a target of 5,400, stop loss at 5,200.
What about you, Nooresh? What are your top stock specific ideas?
First is a buy on Hero MotoCorp. Finally, a new swing high. The stock has broken out above the 30 to 50 levels. Last session saw good volumes as well as a strong uptake on a day when the markets were not doing as strong a move. Continue to hold on to the move even till the end of the day. And out here, the stock has is very close to making an all-time high on dividend adjusted basis charts. So looks like the stock is setting up for a move towards an all-time high. Expecting a target price of 3,600 or 3,800 in the short to medium term. Stop loss at 3,150. Second is a buy on Dr. Reddy's, which after making a move from 4,400 to almost 6,000, did a slow and steady downward drift, making a bullish flag formation for the last couple of months. And now it is giving a breakout about those flag trend line around that 5,500, 5,550 mark. Expecting this to go towards 6,000 in the short term. Stop loss at 5,440.
Okay, thanks Nooresh for those recommendations coming in. But time now to take a small breather on the show. Don't go anywhere. When we come back, we'll discuss stock-specific ideas and what you should watch out for the trading session today.
All right, let's take the discussion forward with Sanjiv. Bhasin is also joining us on the show. Sanjiv, good morning. Sanjiv, the Asia is looking slightly soft today, and it's Friday, right? And we've been all so busy making money on the long side, almost 1,000-point rally from that Thursday afternoon. Yesterday, Bank Nifty paused. Do you think that for whatever trigger, risk weightage, etc., soft Asia, if we pause around and digest gains around these levels, that also is okay for a day or two?
Yeah, good morning. So Ajay, firstly, look at the rally. Last two days, you had almost 400-point rally. So there will be a pause, 19,900, but the left out feeling and the FI flows will drive this market higher. Let's not wait for too much of a correction or consolidation. We've consolidated on the index enough for 2 months. Yes, the RBI move will have little bit high hicks and moves for a day or so, but that is all in the price. Look at how credit is expanding. I was just seeing overnight the US numbers on Gap. The stock is up 12%. So there is a lot of pent-up demand which has been on the sidelines. And by the way, the worst performing people's perception was IT, and IT stocks are back with a bang. So there are enough conduits which can take the index higher. Particularly, this windfall tax fall will mean good for Reliance and OMC. Some of parts I am looking at 20,000 coming. Whether it comes next week, today, or by the end of the month, it's very much on the card that new highs are here. The index as such has consolidated enough, and maybe a day or so of consolidation may continue, but we are going to outperform in the near future.
On the cards, you're seeing a bounce back in IT, but you think, Mr. Bhasin, that banks and financials could be a spoiler? And today, if the likes of, let's say, Bajaj Finance or SBI Cards or Paytm does open with a cut of anywhere between 5 to 10%, should one look at buying that dip?
5 to 10% is very easy off the cuff. I am not looking at such drastic falls. A little bit change in the CET will mean higher cost of borrowing, but these people have highest NIMs in the industry. So yes, maybe a day or so of consolidation, but I would definitely look to buy some of the select stocks. On the other hand, the housing finance companies, since they have 100% collateral, they are looking very good. So some of those plays could catch on. You must realize HDFC Bank and HDFC now as a merger will have half of the mortgage companies with them. I mean, half their business is mortgage. So, I think Reliance, HDFC Bank are poised to drive this market higher. Crude being where it is, you can add a lot of the, tire, paint stocks. So there are enough legs to put the market higher. Bank Nifty may take a day or so of consolidation, but all dips will be bought. Where the bond yields are and where inflation is heading, both India and US is telling us that lending season is going to be very robust, and the liability side franchise is doing extremely well. So a day or so of consolidation is no harm. Select stocks can be, proxy to the news and so on, which is credit cards and so on. But there are enough other players who can make up for it.
Since we're on the subject of the entire impact on financials, listen in to what experts like Tamal Bandyopadhyay as well as FIDC's chair Raman Agarwal had to tell us, because we posed that question to them as to what was the rationale of this move and what will be the implication. Listen in to what they told us.
Swaminathan, Reserve Bank of India, Deputy Governor, he ruled out that any regulatory prescription such as increase in risk weight was considered. That is, I'm talking about in October. Now, what exactly happened in the past 6 weeks that has prompted the Reserve Bank of India to come with this new norm? I don't have any absolutely. I think this is the way. This is the right way to go. The risk weightage, adding it to it, so that you make capital more expensive and discourage them, the lenders, to give low unsecured loans, as well as the borrowers, because the cost of money will go up. But what exactly happened in 6 weeks? I mean, why not during the policy itself? I mean, something we are missing out, or RBI is convinced now the bankers are not hearing the warning, they are not paying heed attention at all.
It has been done uniformly for banks as well as NBFC. My point again is, why increase the risk weight on bank lending to NBFC? I mean, that is something which is surprising. While our lending weight, the risk weights have gone up, absolutely fine, going by the market scenario and going by the concerns highlighted by the governor, and that's absolutely fine. But why do it for NBFCs? That will have an impact. And there is one more technical point in the circular, if you read, it says that all top-up loans, even against the movable assets like vehicles, will also be treated unsecured.
Okay, let's discuss some of those stocks then, because we need to also address it from the beneficiary side of it. We have only been talking about it from the side which will be negatively impacted. But Morgan Stanley this morning has come out with a note which says that stocks like Canfin Homes, Aptus, Home First, and some of the NBFCs which give out loans 99% backed by assets actually could be the beneficiaries. And let's do a chart check with Kunal then. Kunal, out of these NBFCs, housing finance, they have been excluded. MFIs, because MFI is priority sector, that have been excluded. And auto loans. Which of the NBFCs look good to you? Shriram, some of the housing guys, some of the MFIs?
I think Shriram Finance is something which looks interesting. Canfin Homes, as you were talking about, Ajay, the stock has done pretty well for itself from 2023 lows. So I think the low was around 424.25 for Canfin Homes. Stock moved up to 900 in the month of July. But from there on, from the 900 highs, the stock has been more or less sideways. So even if you look at the last 1 month of price patterns for Canfin Home, it's been in an absolutely flat line, but the stock has been range bound as such. So no major trend which I would expect for Canfin Homes. But I think Shriram Finance on the other hand is something which looks attractive. The stock started off the rally from 2023 lows of 1080, 1100, moved up to 2000 levels. In fact, I think yesterday or day before, the stock made a fresh multi-week, multi-month high for itself, breaking past about that consolidation. So that's a much more better chart, much more stronger poised. And I think at current levels would want to go with stocks which are already riding on high momentum. So Shriram Finance could be one of them.
But just shift away from all the financials, and Mr. Bhasin wanted to talk to you about JSW Infrastructure as well. That stock listed with quite a bit of gain. That's the only other port player which is available apart from Adani Ports, which is already, quite expensive in that sense. And today, of course, the stock will be in focus on account of that 4,000 crore letter of award that they have got for a port in Karnataka. What do you think are the prospects for JSW Infrastructure after the run-up that we have seen since listing?
So, Anisha, I will not be able to comment because our merchant bankers were one of the drivers to that, and there's a compliance issue for 2 weeks. After that, we will suggest on that. But as a disclosure, we had a buy rating on this stock.
Let's talk about the other space which is buzzing a lot, Sanjiv, and I want to talk about it is auto. Early data suggests that this festive season, the offtake has been good. Some Nomura reports suggest that second half of the year, it's likely to go up. Look at how TVS came back to 1700 now. Hero Moto almost record high. Out of the two-wheelers, and these are the lagging two-wheeler stocks. Eicher is up 5%. Which ones would be your play in two-wheelers purely?
So, Ajay, firstly, this has been the best sector performing, and it was in the dire straits, say, about a year back. Hero was always casted down. Look at the numbers. In the 17 days of festivals, they've sold a record number of motorcycles. I used to tell you that out of every 4, EV charging, 3 are Hero Moto. I still think Bajaj Auto, Hero, Eicher, that basket is doing well. But please don't miss the woods for the trees. Some of the OEMs are doing even better. Balkrishna Industry, my top pick at 1800, 1900 is hitting new highs. And Bosch, 12.5, 13,000. Repeatedly, I kept saying you cannot have a better player and now it is in all parts of OEM which goes into anything to do with auto. Bosch has hit a new high yesterday, and I would still suggest that there is enough room on that basket. So, pick up a good mutual fund. But my dark horse play over there is Ashok Leyland on the commercial vehicle, Maruti on the four-wheeler, and Bajaj Auto on the two-wheeler side. Bosch and Balkrishna Industries are two stocks which we own in our portfolio, and we may see another 30% upside over the next 1 year.
Anisha, did you notice something in Ashok Leyland? All the other auto companies are actually looking at monetizing the EV side. This Tata Motors did it, so did M&M. But Leyland is actually infusing promoter money fresh into. 1200 crore they have just put in, right?
Correct.
So there is something interesting, and this is the all-time high levels the stock is actually trading at 175 odd. If it goes beyond that, a new territory. How do the charts look, Kunal, for Leyland in particular?
Yeah, I think Ashok Leyland recently, Ajay, I think has started to look very attractive. So, the stock had been an underperformer as such. So, even if you do a price-wise comparison, a relative strength comparison, Ashok Leyland had been an underperformer. But I think in the last 6-9 months, the stock has managed to perk up quite well. So, from 120 lows, I think in the month of March or April 2023, the stock had moved towards 190 mark, which I think, if I'm not wrong, was the all-time high levels for Ashok Leyland. It's now corrected back towards 174 mark. But when you look at the pattern in entirety, the stock is forming a higher highs and higher low pattern. So I think at 170, 174, it could actually be a good bet, good proposition to buy the stock, because even if you expect the stock to retest the previous highs and go beyond that, we could be expecting a modest, at least a 15% kind of a return for the stock over the near term.
Within the oil marketing companies, what looks interesting to you, if anything? Nooresh, the question is for you on the oil marketing companies and other beneficiaries of the crude slide.
So we've started seeing a basing out formation in BPCL as well as HPCL. We've seen a new 52-week high for IOC. So overall, the whole pack looks interesting. It's just that in the near term, the stocks have moved up 15% to 20% in the last couple of weeks. So would wait for a dip at current levels. Risk reward is not great, but the trend has changed for BPCL and HPCL. So top picks would be BPCL, HPCL.
The most undervalued area of the entire PSU basket. PSUs are already being seen as the pre-election trade, and when power PSUs ran up, we already seen one round of re-rating in PSU banks. People are really searching for which is the kind of undervalued area of the PSU, and this actually stood out. And with crude fall, again PSU oil marketing is doing what GAIL. That's not actually a oil marketing company, but it's an energy, oil and gas kind of a company. Pull up the long-term chart. Kunal, look at GAIL and tell me whether this is also an equally good counter. The near-term long positions are being built. Look at in the last 3 months alone, the stock has run up around 15%.
Well, yes, Ajay. In fact, I do track GAIL very closely, and I think over the very recent past, the stock has shown a lot of positive movements, for itself. So, for example, it's coming very close towards the all-time high levels. I think 130, approximately 132, is the previous all-time high levels for GAIL. PSUs have been in flavor, so I think in that regards, even this stock is coming very close towards a breakout. But the stock has not moved at par or at sync with many of the other, if I can use that word, beleaguered PSU names like Coal India, NTPC, etc. The kind of fervor which you've seen into these kind of stocks is the missing factor for a stock like GAIL. But nevertheless, I think I believe that once the stock breaks out this previous barrier of 132 plus mark, I think it could probably lead into a strong spurt of momentum. So I'm very bullish on the counter over the medium to long term. I think it could be just a matter of time that the stock breaks past about the previous highs and scales up significantly higher from those levels.
Taken. So that's a view coming in on GAIL India. But on that note, Mr. Bhasin, we'll let you go. Appreciate you making time and speaking with us. In the meantime, let's go across to my colleague Vinny as well to get a sense as to what the latest channel checks are from the FMCG vertical, because we do understand that we've got some latest note in terms of how things are looking on the ground as far as rural India is concerned, as well as the urban India, and specifically on hair oils, biscuits, soaps. What are the trends, Vinny?
Let's talk about the channel check that Macquarie has done on the FMCG SPAC. When you look at it, the demand concerns they said are highlighted in some of the sectors, like whether it's oil, biscuits and soaps. And what they're seeing and where they see good strength coming in as of now is the coffee sector, as well as coffee products, carbonated drinks, as well as Ayurvedic products. Other than that, they're saying that they continue to remain cautious in terms of the rural demand outlook, because with the hopes of wedding season, that maybe could drive it in terms of a sequential uptick. But yes, keeping a positive, cautiously optimistic outlook on that front as well for the rural demand. As of now, they're saying they've not seen much of an uptick in terms of competitive pressure from cheaper local players and local brands as well, and continued strength is seen in the urban area, as well as they're hopeful for a rural pickup, like I mentioned before as well. Food segment, that continues to be an outperformer versus the personal care segment. That's the trend that we've seen even in Q2 as well. Seems like that's continuing as of now as well. And in terms of online offline, the price disparity surely has seen a bit of a concern for something like a Mamaearth as well. Private brands which are owned by Reliance are witnessing a very healthy growth, is what they are highlighting. Let's move on and talk about one specific company that they've highlighted and spoken about from Macquarie, is from Asian Paints. Now they're talking about Asian Paints price cuts. Let's not forget, a lot of competition is increasing in the paint segment as well. And Asian Paints has taken a price cut across its decorative portfolio as well. Rupees 2 per litre price cut is taken for enamels. Rupees 3 per price cut is taken for across economy emulsions, as well as rupees 10 is taken across a cut of a waterproofing segment. Overall, the portfolio level cut will be at a marginal of around 1%. That's what Macquarie is saying. And this price cuts will be effective from the November of 15th. So let's keep an eye out on this as well.
That was a super fast link by Vinny, covering such a lot of ground. But let's move on and also welcome Hemang Jani on the show. Hemang, morning. Thanks for your time. Let's start our chat with this Asian Paint. Well, ancient paint will also not be a wrong word, because it's been around for a long time. But it appears that the profitability, lure for this sector is now attracting so many new players. Diwali is, I heard that Grasim would launch their paint division or start their factory around this time. By next Diwali, perhaps you may start seeing new products out in the market. Indigo is also now coming very aggressive. So, is there a case for material derating in Asian Paints? That's my question. Or no, their strength cannot be challenged in a hurry.
So, good morning, Ajay. I think this is the point that we've been debating for a while, because ever since few new players came into the industry, with Grasim in particular, making a strong investment, and the presence is now is being felt across. The fact is that the segment itself is growing. If you see, ever since we've seen this new players coming in and all, the volume growth for Asian Paint has not materially got affected. So I think, given the size of the opportunity, the way the real estate market is booming, I don't see much of an issue in terms of earnings. Yes, we will have to watch and see in terms of market share, how the situation evolves and how much of the market share that Asian Paints is enjoying, they are able to protect. But this is the trend that we've seen across industries. The leader, it's not as if that the disruption creates such a big impact that the earnings is badly affected. So it remains to be a great story, particularly when the crude prices are going down. If you find, one bad day, it would be a good idea to buy into Asian Paints.
View on the paint sector as a whole and Asian Paint specifically. But Hemang, a lot of IPOs are also hitting the streets, right? Next week is going to be busy with Tata Tech, IREDA, and today, of course, we got the pricing for Flair writing pens as well. What is your assessment of some of these?
Yes, when the markets are booming and retail investors want to kind of participate in that journey, so that's a good thing. But I have a very specific view. I think IREDA, looks like a good bet for people, who want to participate. And I think from a sector perspective, from growth perspective, I think that looks quite compelling. But Tata Technology, I am baffled. I really try to figure out what exactly this company is trying to do and what is the purpose of doing the IPO. No doubt that, it's a Tata brand and, people have a lot of respect and comfort. But if you look at the numbers and you do a deep dive, I find it very hard to believe what exactly is the reason for which the company has launched this IPO.
In fact, Anisha and Aisha, yesterday, IREDA actually hosted a analyst meet, live analyst meet in Taj, right, Taj Apol Bandar, at 5:30 in the evening, and it was, I'm told, completely chock-a-block.
Packed audience.
Packed, completely packed.
Such interest.
That is a kind of interest, and I got very good feedback. So there are early days, but this one is out of all the lenders from the power space, you have to watch out for, because the only pure play renewable lender now getting listed. And I'm told that the guys spent half the management actually, because there is some kind of a difference the way they talk to us and the way they talk to the market community, right? Hemang would agree with that. And I'm told that half of the entire presentation was focused on how they are efficient and how the corporate governance is, kind of comparable to TCS Infosys. That was the focus. So I will definitely watch out for this particular IPO. In fact, we have a small slice of the chat we had with the management of IREDA yesterday. Let's hear it out.
When we talk about having 500 gigawatt installed capacity, which is roughly require an additional capacity addition of 300 to 320 gigawatt, in addition to 30 gigawatt of thermal, which require for our base load kind of requirement. So fair amount of investment is going to happen in the renewable space. We have a rough projection or estimate of renewable investment in the country till 2030 around 30 lakh crores. And if you go by a rough estimate of debt equity 75 to 25, then around 24 lakhs crores will be required for additional capacity. And out of that 24 lakh crore, typically 50% is expected to be supported by the NBFCs. When I talk about NBFC, the major player would be IREDA and other two major arm of Power Ministry, that is REC and PFC.
It was about IREDA, which Hemang also likes, but Hemang, we should also in the same breath talk about Tata Tech, which is kind of even in the unlisted market saw a lot of action. Now that the IPO is launched, it has done what it has to Tata Motors, almost 700 ahead of that. And have you analyzed that one?
Are you referring to Tata Technologies IPO, Ajay?
Yeah, Tata Technologies.
Yeah, so exactly that was a point that I was trying to make. While IREDA appears quite compelling, and the interest, as you also pointed out, and this space in which it's operating in, a very nimble kind of a small company where people would want to have a pie of it. And if you look at the anchor book, I think people haven't got as much as they wanted. So there is a lot of interest. But Tata Technology, while I was trying to fathom exactly what the company is doing, what is the purpose of doing IPO, there is a complete disconnect. So while Tata name and the technology name would attract some retail investors, when you do a deep dive into the numbers, the kind of spaces that they are operating in, it's looking like that, there is absolutely no real business model. So I am real surprised as to what is the reason for the company to launch the IPO. I would surely not go ahead and go for this kind of a thing.
Interesting view actually, Hemang, because the rest of us were thinking that it's a good business model, it's niche ER&D, the likes of KPIT, Cyient, they have been re-rated on account of the kind of verticals they address to aerospace as well as aviation, and the spend in these two industries hasn't really abated while the rest of the IT has actually been languishing. Could you explain a bit more in terms of why do you think there is no business model at all and business case for Tata Tech?
Anisha, while we have multiple companies into, let's say, mobility space, ER&D space, etc. So on the face of it, all of that is looking quite good. But what I find difficult to understand is that, this company is operating for a while, and if they are operating in these spaces, why the numbers are not reflecting that? And was the only purpose of doing the IPO to kind of, give some sort of monetary benefit to Tata Motors? So my point is that on the face of it, things are looking great, but in terms of numbers, in terms of, the valuations, I don't see any great merit in investing into it.
Interesting, a clear, vehement avoid coming in on Tata Technologies, at least from Hemang. But Anisha, we heard the management as well yesterday, right, when they spoke with the media at large. What's the commentary like? Anything that stood out for you?
Yeah, they talked about the 3 priorities, and the 3 priorities are growth, and growth.
I like that answer of yours, right?
So that's the only thing that stood out very massively for me, and that's interesting because they have been growing at the rate of 30% in terms of the last 3 to 4 years. The profitability has also improved. While I take the point on board what Hemang was making, but nonetheless, at least on the numbers, it does look like it's attractively priced, because even on the valuation front, it's somewhere between 30 to 35 times in terms of forward earnings. And if you look at the rest of the peers, whether a LTTS, a KPIT Tech, Tata Elxsi, they're anywhere between 35 to as much as 70, 80 times. And in fact, we have seen Tata Elxsi, etc., had reached the level of almost 80 times as well. Of course, in the recent, recent year, we have seen a bit of a derating for Tata Elxsi, and that's why it's come off. But at its peak, it was trading at much higher valuation. And the management did allude to the fact that whether it's aviation or the automotive division, there are more legs which are available for them to grow, because the scale up of the business hasn't happened. They're still 40% dependent on Tata Motors and JLR for their revenue, and they're looking at diversifying that a bit more as well. And even other verticals is something that they're quite constructive on. So overall, sounded quite positive in terms of where the business is headed.
In fact, I could get very close to one of their, their lead bankers. We play a small slice of that chat I had with the Vishal Company. So they were kind of tight-lipped about the IPO, but he did allude to the response some of the big investors are showing, saying that in the coming months, you could see a case where the big large cap IT, which provide vanilla services, may actually get cheaper from even current levels, or their derating could happen, and big money is flowing into R&D, auto tech, engineering backed kind of names, such as probably this one, Tata Tech. So that is also something to watch out for.
Okay,
Yeah.
I'm not sure if we do have that bite from the management or the conversation that Ajay had with Mr. Kampani on the same, because it will be interesting to get the perspective. But in the meantime, at least the management is what we can hear, what they have to say in terms of how they reach the valuation, what's their growth prospects, and the 3 priorities, of course.
The discovery exercise and process that we've been through has been informed by the feedback that the banks have received from the investors. After the roadshow, a recommendation has been made to the board, and the board has adopted that position. In terms of the way in which we are measuring our company, I always position for our teams that there are 3 priorities that we've got, and that's growth, growth, and growth. The market here in India continues to grow at a faster rate than the addressable market globally. And so we think that we are in a very exciting swim lane. We believe that the credentials that the company has established over more than 20 years, the customer base that we have, the capabilities that are truly differentiated, I think put us in a very favorable position. And we're excited about the space. We're also excited about the position that we Tata Technologies are in. So we are absolutely invested and committed to growing with the market and to fulfilling the potential that we believe that we have.
Okay. In fact, when Ajay had that conversation with Vishal Kampani, not just Tata Technologies IPO or the IPO market, he spoke about a whole host of things. You can, of course, catch the entire conversation at 10 a.m., but here's a slice of that.
Yeah, I think I'm very confident, and I'm even gutsy enough to put it out that I think he'll come back with a thumping majority. I think he will do even better than what he's done in the last election. I also think that most people feel that the Indian voter is a very dumb voter, and I don't think he's really a dumb voter. He's actually a pretty smart voter. He knows what he wants locally, and he may choose what he wants locally, but he also knows that Modi is the best thing for our country today.
Is that in the price yet, stock market wise, or not yet?
No. I think he comes back with a thumping majority, and India will see the mother of all bull markets next 5 years it's ever seen.
So that's a small slice of the chat we'll be showing at 10, but we're talking about stocks with Kunal, Nooresh and Himang. Himang, I want to talk to you about TVS Motors in particular. The stock is, not cheap by any, valuation metric, but the stock is continuously doing very well from 1450 odd, knocking at 1700 now. People are taking note of how, that too ahead of the Ola Electric IPO, that even TVS Motor houses a very large EV play in it, which is, if not completely, at least 65-70% of Ola Electric operations and numbers. Could there be a case of value unlocking in TVS in run up to Ola Electric IPO, the way their numbers are actually also pouring out from TVS?
We see across two-wheeler is the revival in the growth versus the passenger vehicles or the CV. People had this thought that maybe the two-wheeler segment is not growing and the rural side there is a issue, etc. But the recent numbers, the festive season sales clearly suggest that the two-wheeler growth is back. The new launches that in the premium category have received a good response. And TVS, earlier the risk was that 40% of their portfolio has the risk of disruption because of the EV and it was not very clear as to how exactly the company is going to deal with it. But the way the company has responded to that and come out with various products, I think, it looks like a very compelling pattern, which is why TVS has been the best performing stock in the last about 12 months. So I think Ola IPO, maybe there could be some excitement around it, but the core story is still looking good. But in terms of valuations, I still prefer a Bajaj or a Hero at this point compared to a TVS because purely it has run up so much.
Although there's news out on TVS, they're going to be partnering with Infra as well for import and distribution in some of the key European markets. Remember, TVS has been one of the rank outperformers within the two-wheeler space. Let's see how much more headroom it has in store for us. But Hemang, just talking about the price action yesterday or day before actually, when Bajaj Finance, the dip into the stock completely got bought into after the RBI said that, stop lending via e-com and Insta EMI cards with immediate effect, although it is for just a 60-day period of time. But would you say any such decline in the rest of the NBFC pack, or for instance what happened in the private banking names yesterday, should also be bought into, much like the case was with Bajaj Finance?
I think, Aisha, a lot of things are happening. So Bajaj Finance was yesterday, that was more like an operational issue. So I don't think market was too perturbed by that. So that surely, was not that negative. But I think this RBI's, recent notification about increasing the risk weight, I think that could have some sentimental impact on the categories, like personal loans, unsecured loans, because you will see a little bit of increase in the cost of funding and it was warranted also. But I think when I look at on an overall basis, having seen the banking sector or bank Nifty underperform the Nifty in the last 2 or 3 months, I think there may be a little bit of knee-jerk reaction. I don't think at a capital adequacy level or at an earnings level, there is going to be a significant impact. So I would surely look to buy into some of the banks, private banks, or maybe an SBI at this point of time. And maybe some of the companies like SBI Card, etc., could have a larger, price impact because of the development yesterday.
Right. The other stock to watch out for in today's trade would be DB Realty. Pull up the stock of the last 3 months chart, and Nooresh, I want to talk about DB. Yesterday's block deal action shows that Authum Investments have picked up another 27 lakh shares, and a host of big Mumbai-based big HNIs had did preferential, and since then the stock has been rallying 13% this week, 7% this week. Pull up the 1 month, 3 month chart. Today also the stock could be in focus because Authum is adding on to the previous position. What does the chart tell you for the targets here?
So technically, if you look at the stock, it started correcting back in 2010-11, where the stock used to be 450. Post that, even in 2012, it tried to make a comeback to 150. And over the last 10 years, multiple times, the stock has topped out around that 150 mark. As such, we topped out around 120 after that preferential issue back in 2022. A couple of times 120 to 55, then again back to 122, 120, 130, back to 55, 60. And now a new rally has started from the month of August, wherein we've seen huge volumes. And the volumes have continued. So technically, the structure is it has given a huge rounding bottom formation above the 150 mark. At current levels, the risk reward is not great. But this is the structure we are seeing in a lot of real estate stocks, from the largest to the smallest. Many stocks have crossed 2010 to 2014 highs. So structure is positive, could be a slow and steady move at current levels, given the move, say it moved up from 140 just in October to 200 now. The risk reward is not great, but a dip to 175 to 190 zone could be an accumulate area.
Talking about the marquee investors, wanted to highlight Jyoti Structures as well, because in the latest fundraising, it seems that in the proposed list of allottees for the pref and the warrants, Ashish Kacholia's names features in that list. So just wanted to put that on board as well. But just taking a look at the pre-open rates, and it looks like Nifty is likely to open just around that flat line. Not a big move is what we are seeing, 19,770 at the Nifty level, and Sensex also pretty much tempered. In terms of the individual movers, very early rates what we are getting in. But Brigade Enterprises, on account of that new project, is higher by 4%. JSW Infra, on account of that 4,000 crore pot that they have bagged in Karnataka, is also trending higher. And then you have names like Lal Pat Labs, Concord Bio, etc. But of course, the space to watch out for is financials. So let's watch out for some of those. Let's pull up a SBI card for that matter, a Paytm, and even the other lenders in terms of what the impact is, whether it's a federal bank or a RBL, etc. For now, we are not seeing a big impact on any of these names. Very, very tempered move, but let's see how it pans out. For now, all of these names are actually holding up okay. But just a quick chart check, Kunal, if I can get you in on SBI card and RBL Bank.
I think both of them are completely divergent charts, Nisha. So, for example, SBI cards was struggling, I think at the 750, 760 mark for quite some time. It was also struggling below the 200 moving average. So at a point when the markets were or are showing a lot of strength, SBI cards over the last 1 week, over the last 1 month, as well as over the last 3 months, I think has been going through a corrective phase for itself. So it doesn't come as a surprise that the stock is actually showing further weakness or could show further weakness from here on. These are the stocks which are best to be bought when they come back and give a stronger breakout above their 200 DMAs. I think that could be closer to 800 mark for SBI card. So one has to wait out for that breakout to happen for the stock. RBL Bank, on the other hand, could actually be a interesting stock because it's actually perched very close to its previous major multi-month highs for itself. I think at 255 odd mark where it closed yesterday. So I believe that could be an interesting stock to watch out for. In case if it manages to come back to that 255 levels, we could expect a bigger breakout for RBL Bank. On the other hand, 220 seems to be a strong support for the stock price. So maybe closer to 220 is where one could look to buy on dips for the stock.
Okay, just want to mark what Poonawalla FinCorp may be up to, because that's also part of the list of the companies which are going to get most impacted after the RBI's move. And I also want to, there you go, 2.25% lower right now. And Bajaj Finance, SBI cards, of course, Anisha already flagged out. That also should come up for you on your screens. Having said that, what are the housing finance companies doing? Let's check in on that as well. Is there any rub-off on an HDFC Bank, on a Shriram Finance, etc.? Maybe not as much would be the case as what you're seeing right now on, some of the other NBFC players. Also want to check in on what, large cap IT as well is up to, along with some of the mid cap IT names we've been talking about as to how the street is extremely gung-ho about the ER&D space. Look at what's happening within the entire technology, sector, because you are seeing for 3 consecutive sessions now, if today there is a follow-through, that would be a third day of some solid gains on this particular sector, still holding up in the green as we speak right now.
Okay, so those are some of the, top movers at this point of time in the pre-open rates. But financials, they continue to hog the limelight right now. So let's discuss that further with Jignesh Shyal, the Director, Research, Head of BFSI Sector at Incred Capital, joining us on the show. Jignesh, hi, good to have you. Let's get stock specific and talk to us about SBI Card and the other companies which you think will be the most impacted. What are you doing to your estimates in terms of growth, in terms of cost of funds? What's the initial assessment?
Look, so obviously on the incremental part, it's a little difficult for us to predict immediately. But obviously, NBFCs are getting impacted more. That too specific, somebody like SBI cards, so in that case, Bajaj Finance and all, which is under our coverage, will get impacted more compared to housing finance companies or vehicle financial companies, where there is enough room or leeway still left by RBI. But obviously, we will see a kind of a reduction in growth, or otherwise, a capital dilution impacting the ROEs, at least for a couple of names, including SBI cards. But that finance is still relatively better off because they raised money recently, so they are still able to absorb it quite comfortably compared to anybody else.
So are you reworking any of your ratings or price targets within the entire BFSI space?
For banks, we think overall consumption, what we are seeing, capital consumption, we are seeing is still pretty comfortable, in the range of somewhere around 0.8 to 1.2 on a higher side, and that too if you include the lending towards NBFCs and all. So that way, they are still better off. So we do not think so that there will be major change happening, at least on the private banks or even in the SBI side. There could be some impact which we might have to take it up in case of NBFCs, but even in that case, HFCs or even vehicle financing companies, we do not think so there will be much of an impact because for vehicle finance, specifically like Chola or Mahindra and all, we also have to see how much of their borrowings are getting categorized under PSL norms, and then obviously there will not be any much of an impact on the cost of fund side. So based on that, basically, or getting some sense from management, we'll be revising it. But obviously, somebody like SBI cards definitely will keep a little relatively more closer watch on the estimate side.
Jignesh, great to have you in with those thoughts on what's really going on within the BFSI sector, how it's going to get impacted post the RBI's move. Let's just check in on what a JSW Infra as well is up to. They've bagged an LOA for about a 4,000 crore rupee port in the state of Karnataka. JSW Infra has gapped up in the pre-open rates itself, 7% higher on that stock as we speak right now. TVS Motors, we already flagged off. They've marked their foray into Europe. Look out for what some of the OMCs and the oil sensitives may be up to, paints, aviation, etc., given the kind of crude crack that you've seen overnight as well. But let me take it across to Sharad and find out what are some of the other stocks that are going to be in focus this morning and what's all the cover that he's picking up from the D Street chatter. Sharad?
Well, yes, in focus we are having ITD cementation, and it's expected that a large infra order would come in for the company. Now, do remember that the company itself is currently pursuing orders worth 30 to 40,000 odd crore rupees, and the order inflow guidance which they have set ranges between 8 to 9,000 odd crore rupees for FY24. Now, in terms of growth levels, they are expecting roughly 20 to 25% growth levels in FY25 itself, and also the margins are expected to come in double digits. Earlier at ET Now, they had stated that they will be actually focusing on the high margin business by reducing their non-legacy business as well. Apart from this, the H1 FY24 order inflows stand roughly at 4,820 odd crore rupees, and stock has been also buzzing off late, and also FIs have been increasing the stock over the last 3 to 4 quarters as well.
Very interesting. ITD cementation is in focus. This is a good quality infra play, had fallen to almost 196, 198 odd from October lows, and look at the way it has come back. Kunal, can you do a chart check for us on ITD cementation?
Yeah, so I do track the stock. I think almost a month odd back, the stock was at 210 to 15 odd levels. It had come back closer to the 50-day moving average. In fact, it had dipped slightly below the 50 DMA when it had corrected to that 210 odd levels for ITD cementation. But then, the charts have been, much trading above the 200-day moving average. So the 50 catch point for, ITD cementation, the stock has managed to somehow float around those levels and then make a strong comeback. I think the last 1 week or 4 or 5 days particularly has been quite strong in terms of momentum for the stock. 230 to 34 was the breakout point for ITD cementation. I think post that we've just seen the stock gaining strength, and breaking past above all of the previous major resistances. So it's a very interesting chart. I think 210 odd, which was the previous major swing lows, that could now act as a major support for the stock price, or even the 50-day moving average, which is closer to that level. Now, on the upside, we could be looking at 275 first as a near-term target for the stock price, and on the higher end, I would be of the belief that the stock can even surpass 300 plus.
And just taking a look at some of the other buzzers, Brigade Enterprises is up 3%, SJVN on that new project that they have also got is up around 2%, and in volume buzzers, delivery is coming up. That are also, of course, on account of that SoftBank block which is expected. So just watching out for delivery as well. It was almost a 4 to 5% of the equity that was expected to change hands. So we'll watch out for that. But in the meantime, Nooresh, what's your view on the real estate pack? And is there any stock that you would recommend booking profits in? And secondly, fresh buys in?
So as of now, it's actually a time to ride the whole real estate rally. We could see some corrections. So you want to be buying on dips rather than booking profits, because a lot of these names have given multi-year breakouts. So if you look at a DLF, which is the torchbearer of the rally, the stock has come back above the highs of 2009, 2008. So when such major breakouts happen, you want to be buying on dips. So in that case, one could be looking at, say, some of the smaller names which have not moved up quite a bit. So something like a Puravankara, which is coming back to 2018 highs, is a buy on dips. You have a Brigade, which has already done up in the last few sessions, but still looks promising at current levels. Any dip, a dip back to 670, 680 would be a buying zone. So overall, looking at the whole real estate pack as a buy on dips. The last one is Godrej Properties, which has given a breakout. Any retest of 1750, that should be the most interesting one.
Interesting ideas coming in there. Look out for delivery as well. It seems that SoftBank is going to be offloading that 4% stake. And that block deal should also happen. But in the meantime, just taking stock of what else is moving in the market. Manappuram, of course, is one stock which has been doing very, very well off late. So that is one stock which held out by a solid 7% yesterday too. The management did speak with us as well yesterday. We will, in the due course, play a soundbite of that too. But right now, yeah, go ahead. You want to add something?
There's a value unlocking happening in Manappuram as well.
Yeah,
everybody thought only about the results and good commentary in the call, but there is Ashirwad Finance IPO, which is a microfinance. So pure gold loan companies are focused on only asset. If they don't go to microfinance, which is the safe and high growth area, that is also something the street really liked in Manappuram con call. And 2-3 days consecutively, they saw very good buying coming in.
Yeah, in fact, the other space which has been seeing continued buying apart from some of these financials is also pharma sector, which is coming back. So Wockhardt, for instance, has seen massive gains in the last 2 to 3 days itself. Nooresh, quickly before we look at the opening rates, give us a quick view on Wockhardt.
So Wockhardt is interesting. This is one of my picks which I gave on Diwali. The stock has made a major bottoming out rounding formation, given a big breakout. The last 3-4 sessions, we've seen strong volumes. It's broken out almost a 1-year high. The stock is available at the same prices where it was in 2003 to 2013 also. On the upside, it has been to 2000 a couple of times in 2013-15. So the view is it's still a buy on dips, could surprise on the upside towards 500 also in the long term.
Counting down then to the market open, let's just see what the mighty banks which actually led the fall yesterday as well are up to. Axis, ICICI Bank. Remember, these two were big drags yesterday. Actually, you know, the cooling off even rubbed off on some of the other spaces. SBI, IndusInd Bank, even L&T cooled off quite a fair bit, as did Reliance Industries. So let's see which way the tide actually turns in today's trading session. Key, of course, is going to be on our radar what the entire BFSI space is up to, especially the likes of a Bajaj Finance, SBI Card post the RBI move, or for that matter, going down the line, even a Poonawalla FinCorp, etc. Let's start off with Bajaj Finance first. While the Nifty has cracked about almost 0.5% or so and now stabilizing just roughly around the 19,700 levels, it's really not that bad a start. You're not seeing a big fall really. It's a muted start at best, even for the mid and the small cap indexes, which are right now just marginally soft. Bajaj Finance, 2.5% lower as we speak right now. What is SBI Cards then up to? That stock will just come up for you on your screens next. That is down quite a fair bit. 5.5% is the fall that you're seeing on SBI Cards. Delivery, I think the block deals happen, 2.6% lower. Poonawalla FinCorp is the other one, which should come up for you on your screens next. HDFC Bank, Shriram Finance, they are the other ones. though the street believes that they're going to be least impacted within the housing finance segment, because loans under priority sector is excluded, which will not include housing. Right now, the street may be only sentimentally reacting to that and painting the entire sector with the same brush, but I think sanity will prevail eventually. So HDFC Bank, Shriram Finance, the other housing finance companies are going to be out of that gamut. What is Poonawalla FinCorp up to? We didn't check in on that stock because it's quite a deep gash that you're seeing on SBI cards for sure. Roughly about a 4% card on Poonawalla FinCorp as well. Now let's check in on what the big banks are up to, the ones that actually led the fall yesterday. Axis, ICICI Bank, SBI will just come up here on your screens. The weakness over there continues. In fact, quite a sharp fall for SBI. It's down over 2.5% as we speak. To the buzzing ones, what the mid-cap, or rather the IT pack is up to, considering they are the ones which are really sort of ruling the roost along with the auto pack. So Nifty IT has started off tempered, relatively better than what the rest of the market is up to. Delivery, I think that block deal has happened. The market was anticipating that SoftBank is going to be the seller, and about a $150 million block is what we were anticipating. TVS Motors, after their foray into European markets, let's just check some of the newsmakers as well. JSW Steel, which has withdrawn the application for the final mine closure plan, which was submitted in early September. JSW Infra, after them getting the LOA for the Keni port in Karnataka. There's Brigade as well. They're looking to develop a land parcel with a value of about 2,100 crore rupees in Bangalore. So look out for some of these names. And MCX as well. That's been fairly buoyant of late. All the traders last night did talk about a gold move, which they believe was an aberration. MCX down about 0.5% as we speak right now. So nothing really big as such a move, unless you guys are spotting something. Yeah, crude sensitive surely holding out. I can see a 2% bump up on Asian Paints.
Yeah, the only other pocket is PSU banking space, because that index is down a good 2%. So PNB, SBI, in fact SBI is down 2.5%. So that heavyweight does deserve mention. And of course Bank of India, Union Bank, these are some of the other names that are in the red, but not very surprising given the news flow. But time to take the first trades from our charters then. Kunal, what's the first trade that you would be punching in?
So that would be DLF. I think the real estate pack and the rally which we've seen for the stocks has been quite strong. DLF stands to be amongst the more prominent ones from the real estate pack. Would be keen to buying the stock.
Nooresh, what are you spotting?
So that would be a buy on Dr. Reddy's. Looks promising at current levels. The risk reward is good. Expecting a move towards that 6,000 mark in the short term.